Hey, yes, welcome to this new video. So today essentially it's quite easy what we'll be looking for here. I'm currently on the Bitcoin chart, but we'll quickly hop over to the SPY chart to get this video started. There's a lot of important things happening this week, and it is important to keep that in mind in light of the entire chart right now and the decision point at which we're at. So I'm going to talk about that quickly, although first I want to in fact cover the events coming this week and why it is such an important week. So this website is cryptocraft.com, not sponsored, but it's just such an amazing website that I would definitely look at for the news events that come out. So essentially what we have to keep in mind here is that the FOMC, the Fed, is having many meetings and releasing a lot of data this week, which is extremely important to what you should be expecting in the markets. So essentially what we have to be looking at here is, even though today there's practically no news, lucky us, tomorrow there is very, in my opinion, little news that is of any relevance. Consumer confidence could be something that we might want to look at. That is indeed indicated by these different colors, being yellow, least relevant, red, most relevant, and orange, the middle level, or not too relevant, but could possibly make an impact rather. So yeah, to Wednesday, we have an insane amount of news. As you can see, we have 3 orange or level 2s and 3 level 3s with a lot of impact. So I would definitely keep in mind on Wednesdays and try to minimally trade or not trade it at all. Just don't trade this week. I'm not telling you to place any bets this week or in this video. I'm just doing the analysis that could indicate some direction possibly. As you know, as a trader, I always advocate that you should constantly be nimble, constantly adapt to the markets, because it's the entire thing what trading is. So in my previous videos, I've noted the different ideas of it being a bull trap, bear trap, etc., etc. It isn't quite the idea of like, oh, this is what it is and I'm sticking with it. It's just observations that can be made and then looking from there and adapting at what the market shows you. A lot of what I've said is not yet completely invalidated, although I would say some things are less optimal than expected, especially the bull trap video. I still expect a strong reversal and retest of lows, especially at 19K, but we'll go over that here in a second. Before that, I want to cover the rest of the week. We've got some UK news on Thursday. Not too important, but hey, could be. Not too important, I mean, in the sense of globally, although, of course, for anybody in the UK, that is extremely important. And then here we got on Friday, we got U.S. average hourly earnings, non-farm employment rate, and U.S. unemployment rate. These are important, but I would definitely be looking here Wednesday with the FOMC statement and the interest rate being released and another press conference. And this is more important data that I would keep an eye out for. But this statement here is always the biggest impact, or rather the federal funds rate, is the biggest impact event that we have each month. As for the week on top of this, just to quickly take a look at it. Well, that isn't very quick. So that's suboptimal here, but we'll just go on and move over to the charts. So essentially here what you can see is something I've been looking at for a while, but I can't quite say it's a concrete idea, is this inverse head and shoulder on the weekly chart we're seeing on SPY. So essentially, I'll just draw here. You can see that we have this head and shoulder forming up with the deviation to the upside in October, I believe, in August here. Right? So essentially, you have these drawings that show that we could be seeing a reverse head and shoulder, and to invalidate that we'd need a reject here off this zone. And the best way we can reject is off of this level here. We'll just zoom in on the 3-day and delete this. And if we zoom here on the 3-day, you can see this 410 level is already serving as rejection. Now on the 3-day, we also have the 200 moving average forming as rejection here. 200 moving average on a lot of time frames is gonna be a big resistance, and 3-day is something a lot of traders look at, or relatively a lot. I would way more be looking at the daily chart than the 3-day, or the weekly than the 3-day, but it is something certain traders on certain time frames certainly look at because it's right in between. And essentially you see this resistance here forming, and on top of that we have the possible neckline for an inverse head and shoulders. And if we just quickly invert the chart, you're gonna see that if you were to have been a bull, you might indeed have seen that as a head and shoulders, or a bear. In this case, you might have seen this as a head and shoulders coming down. So it's something to keep an eye on here. In general, what we can see on any time frame we'll just go here to regular trading hours, for SPY, for the S&P, is that this is forming as resistance and has been resistance and support for a while here. So it's certainly something you would want to look at and keep an eye on. How this forms up, currently forming as resistance, rejecting from 405, 405.8 or 408, and currently sitting at 427 pre-hours. So if we see continued rejection from here, we will still be looking for the 4-hour low forming. So that would mean, or higher low, which would mean we have a low, higher low, higher low, higher low, higher low, higher low, higher low, and here possibly we still have a lot of space. In fact, we have over 3% to form another higher low and then retest here to get a retest of the 410, 4.8 level, and then possibly break through, flip, and actually see some real bull movement, which would actually be the first real bull move we can actually say, hey, a lot of the bear case is invalidated on the S&P. Now, this is completely dependent on the news. We're also in earnings season, so there's so much going on that I would definitely keep an eye on. Now, on top of that, we have dollar. Let's take a look at the dollar index here. So currently today, we're already seeing quite bullish movement here on the dollar. What I don't like is in the last, so on the day, you can see we formed a white candle or a green candle that was rejecting. And on the 12-hour, you can see this does seem to want lower first, right? So usually when you see a candle that ends without a wick on the bottom, you want to see continuation. Let's see if we can find an example here. Yeah, so here's actually not the case. So here my theory is wrong. Here you can see another example that it is indeed afterwards you see more bearish candles. Now this isn't always the case, right? So here it's also technically a gap up and not a gap down. But nonetheless, it is something to keep an eye out, that usually when you see something like this, in my experience, you want to see another candle down or a wick down. Now we do have a wick here, but oh, there's a small wick. That's my bad. I didn't even see that. Look at that little wick. That's not too bad. So we're going to go over here to the 4-hour, 1 hour. Let's take 4-hour for now. Good time frame. And what we see here is a strong case for a wedge forming with possible breakout formation forming up here. This is usually something I do look at as a potential breakout. You see this volatility or these big candles constantly coming in here, small candles. So there's indecision, but simultaneously a lot of volatility is exactly what you want to see a breakout, right? You can see on the daily, it's kind of getting less volatile than you can see up here. It's smaller candles forming into a previous zone, which could be a order block in smart money concepts. So I would certainly be looking out here, since there's so much volatility up and down, and on the daily chart it looks so that the candles look so small but the wicks look so large. There's so much volatility and indecision that usually if that comes into a support play or resistance play and you start seeing this, it is certainly something to be looking out for, that hey, are we going to see a reversal here? So keep an eye out on the Dixie, especially during these times with the FOMC and stuff. One bad news case or one less well than expected, or even what expected, and you could see this turn around very quickly in these market conditions where we've seen excessive bullishness on, we'll just keep it here, but excessive bullishness on the SPY ever since October. Really, we've seen this drop here, and this was on an FOMC meeting, and we've seen a drop, but simultaneously it really isn't a big drop. We haven't really seen anything like this, a new low or anything. We've just seen continued upside with retests of these levels continuously. So I would certainly be thinking, hey, why have we seen this move, and does this move indicate that there's a possibility that if we even meet expectations, that we see a rejection off these highs? Now that we've made the case that there's a lot of news, the SPY is facing resistance, but simultaneously there's a decision point that if we do flip this head and shoulder or do flip this 410 level, we could see continued upside. And we have the Dixie at support trying to break out due to the candle formation that we're seeing. So we have managed to establish these facts. Now, I do want to look quickly at the crypto world before we get on with this, but it is something to look at with a big week ahead, that if you have this resistance level, both horizontal resistance, diagonal resistance, in a head and shoulder pattern with a bunch of news, I'm not telling you to trade the breakout to the upside or trade the rejection. I'm not telling you to trade anything. I wouldn't do that. You could trade if you so choose, if you know your risk management, but I'm not going to tell you which direction we're going. I'm just here to say, hey, look, these are the probabilities. These are the things you could actually be looking at. And so the Dixie trying to break out here on the daily, and then we're gonna go over to Bitcoin. I had previously spoken on Bitcoin about over here. I was saying, hey, look, guys, this is such a parabolic move. We're in this rejection here, rejection zone here, and rejection zone here, right? So there's 3 resistances. This is the resistance I want to see broken. So if we break this and flip this for an actual bullish thesis, and the bearish thesis to be completely invalidated, in my personal opinion. Now, I'll just keep these marked as the resistance zones for now. We flipped a lot of resistance zones. So you see here, rejected, 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 and we just broke out over this resistance zone. Next up, this resistance zone. Broke over it right away, flipped it, held it, and now are retesting this resistance zone and this order block up top. The order block hasn't quite been tested as I have on this drawing here. I would have wanted to see this order block properly tested before we see a proper rejection. Now, again, usually what I have seen in my time trading is what you can get is this slow grind up, bull break over, down, and you have this kind of tower formation that forms. Now, I'm not saying that's going to happen. I'm just saying I've seen that. And then you have this little rejection, little sideways, boom, big dump. This was the bull trap, right? This little peak here would be the bull trap. Again, at the bare minimum, personally, I would be looking to see 19K retested before we can really speak of any real bullish continuation. Reason be, of course, if there's a new bull market, we can see this. That's why I would say, hey, if we flip this 25K zone and we hold it, I would be looking for longs. Nonetheless, I would be cautious because this 19K zone is a complete void, right? We have a complete void here at 19K. We've made great moves. We'll just draw this. Actually, I'll remove that. My bad. We've made this very bullish move, but there's a void everywhere. This is pure up, no down. Pure up, no down. There's 2 big voids that need to be filled, and there's a strong point of control. I'm not sure if it's a point of control volume-wise. Let's see. It is the point of control volume-wise. And you have this strong point of control. It's completely untested, and I would just be continuously looking for shorts up here and see any weakness, trend change, and then I would short. And that's what I would be looking for here. But that's me. And your analysis could be different than mine, and I'm not telling you to short. I'm just saying, hey, this is what I'm objectively looking at here from my trading style. On top of that, in my opinion, if we quickly delete this And we look what we have here, right? We have this. I don't trade purely off of one idea. Just to clarify, I look at a bunch of different factors simultaneously and say, hey, this is my thesis, and then I trade off of that. I'm not going to give my explicit thesis. I'm just giving you guys all the things or some of the things I'm looking at myself in my trading style, and then showing it to you guys so you guys can make your own decisions based off of that. Now, when we look here, we have constant lows, and here we have constant highs. Right, on the RSI. Here on the RSI, we have constant lows. And on the trading, and I'll just draw it out with the pencil instead, this high is the highest point. So that's point 1. You see how this is the lowest point of the trend. Here's the second highest point, these tops. So we're just going to draw that out. Second, so it's lower here. And this is the highest, and it's even lower. That's what it's called, RSI divergence, right? So this RSI chart is divergent from here. There's less volume, there's less interest at these levels, even though we're coming at new highs on prices. And on the volume index, there is low. So you can also see it here, right? You can see that there's actually decreasing volume at these levels, meaning there's less interest from smart money or big money, people, interests, companies, and investors. It's certainly something to be looking out for. You don't want to see that. So this is another reason that I'm looking for shorts. There's just so many ideas here to be looking at that there's no real bull thesis except when we flip this. Then I would still be looking again for that 19K retest, but I would certainly be looking the long if we flip this and then go here, breaking this high, right? Break this high, and then I'd be looking along here to set this new trend that is an uptrend. But for the time being, if that doesn't happen, I still see a lower high on this line, a lower high if we set in a high here, and then we could even go down again, right? And then set a new lower high. And until this fundamentally shifts, because you could be looking at these, but I count these as tinier ones. Right now, I am looking here that this one set the new low but is now broken. This one I don't really take into account since it was a purely news-based trend and it wasn't anything particular. So I am certainly looking at this one as an interesting idea that we have broken this here, right? So we have set arguably a new trend, right? Arguably at this point, we've set a new trend, and that's why I'm still looking here for a bounce long, seeing if we can put in a new high. If we can't bounce here and we see new lows here, I would still be looking at long from here, but I would be looking at short up here. That is my personal opinion here on Bitcoin. Ethereum, we're slightly I'm going on the 4 hour, so we can look at the 4 hour on Bitcoin if you guys want. It's essentially the same thing as Ethereum, but I'm just looking at Ethereum. On the lower time frame, we've constantly set highs. There's no real reason to be looking short on the lower time frames, in my opinion, until, just like on Bitcoin, we have this protected low, right? I'll just delete everything, right? And we'll just go on a 4 hour. There you go. Higher low, higher low, higher low, higher low, possibly higher low. So this is the current protected low. Then if we break this, I'm looking for a trend shift down. Very simple trading style here. Very simple concept that I think you should always keep an eye on, because trends are the most important thing as a trader to look at, period, in my personal opinion. Ethereum is the same thing. This is the protected low. This is the potential new higher low we're setting, and we could see a new bounce off of here, or a new bounce that sets a pennant type of pattern, right? So, yeah, constricting zone. But in general, as long as this protected low on Ethereum, this protected low on Bitcoin does not break, there's no real reason for me to be looking super short yet. Now, on different altcoins, which I'll quickly take a look at here, you can see Ape, on which I actually have a short open. We actually did break the protected low, right? So we do have this protected low broken, which means we can be looking for a lower high, another break, and the trend down to begin. And I think the same thing is for something like Shiba, protected low, broken, can be looking for the same thing. Same thing goes for something like Luna. Right now, a lot of people don't want to trade this at all. I completely understand. It's just I like the chart pattern, right? The protected low here or here, whichever you want to be looking at as more significant, is broken. Both of them are broken, right? Doge is the same thing. If this is your protected low, now you could say this is your protected low, but nonetheless, on the lower time frames, let's say hourly, this is definitely the protected low. We have seen a break, and we can be looking to short again, back to retest this. Maybe we can see a new high, but for the time, the protected low is broken. And yeah, so that's what we're looking for on Bitcoin. Bitcoin has not led the way yet and shown that these protected lows, or in this case, I have a low here, but on this chart, but I would certainly be looking on the hourly, my bad, wrong chart, that this is the low I actually want to see broken. So as long as this one doesn't break, there's no real thesis super bearish yet. Nonetheless, keep an eye out. And yeah, that's it. So keep an eye out for all of the above. So first of all, just to cover everything very quickly, we have the FOMC, the interest rates, etc. all this week, big week. Then we have SPY right at this resistance zone. Simultaneously, if we flip it, we can see a bullish head and shoulders pattern. Dixie in this wedge pattern here that we can see all the way down to the 4 hour, all the way down to the 1 hour is completely valid. And if we see a good breakout here, we certainly could see some bullish action on the US dollar, meaning stocks and crypto will be negatively affected. Usually, not always, but usually this is a correlation. Bitcoin, there's a bunch of things that I don't like, including the RSI weakness and the resistance zones. And there's super bullish, don't get me wrong, but there's no super bull thesis that invalidates the bear thesis quite yet, in my opinion. So you would be looking for this low for the shorter time frame to get broken and retesting 19K. And then on Ethereum, essentially the same thing. So thank you guys, and keep an eye out this week because you do not want to get caught up in the FOMC.